What is the difference between HEM and CILE is what we're talking about today on the eCentral Business Show. I'm John Nayler, joined by a resident expert, Laura Sillano, and we're talking about mortgage broking, yeah, or cooking. Which is it today?
HEM and CILE.
No, seriously. Now, first of all,
so
before we talk about HEM and CILE, let's talk about advice. You know, is any of this advice on how to do some cooking?
In foodstuffs? No.
Is it about mortgages? No, not either.
No, just not advice.
Oh, I'm glad we're getting through this. But anyway, there is a story with this beyond the jokes. HEM and CILE is something. And what's HEM?
Okay, so HEM is household expenditure measure.
Okay.
Okay, so that you might hear of benchmark, HEM benchmark or stuff.
Oh, because that goes way back. The banks have used that for quite some time, have they not? In terms of like working out. Having
a rough calculation on what it costs you to live. Yeah, so household expenditure measure is about, it's statistically, depending on where you live and how many people are in your household, what it statistically costs you as a minimum to live, as a minimum. Not just, you know, the holiday and everything else, but what does it actually cost you to live and survive? So that's what the household expenditure measure is, that's used as a minimum benchmark in serviceability by lenders, though no longer. So it's been replaced by CILE.
Oh, okay. CILE sounds a lot more spicy.
Which is customer identified living expenses. So what that is about is that the lender wants you, and this is really topical at the moment with the Royal Commission and everything like that that's going on as well. So this is about the lenders need to base their serviceability calculations on your actual living expenses. So what you actually spend to live, not on HEM. Not on a benchmark. So that's why it's massive at the moment, the focus on this. So one of the best ways that people can work on their position and work on their ability to get a loan is by doing their own budget and working out exactly what their living expenses are. And then sitting down and going through it to go, where can I make improvements? What are the things that are negotiable? What are the things that are not negotiable? Okay, and so the banks have got an increasing responsibility about talking to you about actual real numbers in a person's life. Correct. So they don't. So if the household expenditure matrix for 2 adults and 2 children for somebody living in Brisbane is $3,600 per month, if your actual expenses are a lot higher than that, and most people's would be, if your actual expenses are $6,000 a month, then we need to be working your serviceability assessment on the $6,000 a month, not the 3.5.
Yeah, so lenders have got a greater responsibility to talk about the reality of someone's life.
Yeah.
Rather than just like, oh, we expect you're living like this.
Yeah.
And we know, there's diverse lifestyles out there, isn't there? There's people that do live very frugally. Yeah. They actually can be well below that measure. There's an upside or downside to this, is there not?
It would be really, really unusual for people's actual living expenses to be underneath HEM. It would be they would have to be eating probably lentils.
Really?
Yeah, it would be unusual because the cost of living, I know from my own budgets and seeing the people who I've worked with that the cost of living isn't going down. And the cost of food and general transport and all of those things aren't going down.
So what you're saying around this is the HEM model was kind of flawed in a way. You're sort of concurring with what they're saying around that?
Yes, and I guess the thing is that when it comes to serviceability, there's so many things that are taken into account in serviceability that it kind of, like the buffers that are required for a benchmark rate that's used. So even if somebody is paying a rate of 4%, if the benchmark rate that your loan is assessed on is 7.25, there's still a buffer in there. But what's become really clear is that buffer can't compensate anymore for the difference between HEM and your actual living expenses.
In reality, yeah. Okay. Yeah. So what advice have you got? Well, obviously not advice, but what suggestions maybe then for mine? Like, obviously, people need to then have a very structured budget if they intend to lend money or go after a mortgage at some point.
Yeah.
They need to live a really structured
Yeah.
lifestyle and document, or get one of these budget consultants or like household budget consultants that come in and
the best way, honestly, I think the best way to become really, really familiar with your own circumstances is to actually download a copy of your own bank statements and have a look at where you're spending money.
Oh, okay.
Have a look at it, because it will tell you a lot about your own habits and the things that you value. So if you value convenience, you can, with food, for example, you're probably likely to see things like Uber Eats, Subway, whatever, like fast food chain. You'll get accustomed. You'll get to see very clearly where you currently value, like what you currently value.
Okay.
And then you can make informed changes on what you want it to be.
Okay. So the Australian dream, the dream of owning property, the dream of owning a mortgage, all that is not out of reach. It's just it's all part of a increasingly so a much more structured sort of approach to things. Yeah, that needs a bit of a run up, a bit of a runway towards making it happen.
Definitely, definitely. If you're thinking about getting a loan for a new property and you haven't done a budget or you haven't looked at your own expenses and what your lifestyle currently is, because there is going to be a lot more scrutiny on the lenders to make sure that they've checked your living expenses as well. So it's not just about it's about not just about you understanding your own position, it's also about that the lenders and brokers need to do that too. So help us.
Okay.
Help us along, that'd be great.
I've never heard that being said by a mortgage broker before. They're looking for help. But anyway, no, I get it though. So help build your story around all the things you do around, if owning property is something you aspire to do, make sure you've built a really good story about it. Educate yourself.
Yeah.
Educate yourself.
Yeah, educate yourself and start to prepare for that transaction early.
Okay, tremendous. Now, obviously, all that sort of thing, and the earlier they start that conversation with a broker is a really good idea from the point of view of educating themselves further about their specific scenario and how they best navigate their way. Yeah. And that's a conversation I have with Laura Sillano, I'd recommend, personally.
Thank you.
How do they get in contact with you to have that conversation?
Yeah, you can call me on mobile 0422 320 497 and also email through to the office home@podfinancial.com.au.
Okay, that's some really significant and wealthy knowledge there from Laura Sillano, a resident expert mortgage broker on the eCentral Business Show. I'm John Nayler. We'll see you next time.